We are looking at the Canadian dollar Japanese yen this morning. A couple of things I would like to point out. The big trend in the CAD yen has been to the downside. Okay, you can see this trend started from here. It's been coming down really strong. So 0, 1, 2, 3, 4. Okay, we have 5, 1, 5, 2, 5, 3 with this one. So basically we've been in a good and strong downside movement. Then we started seeing an attempt to go up. So we have a momentum high here. But this is the structure that holds the price, the downtrend. This has to be broken down. So that takes us to the current, that brings us to current area. So we can see this is a trend. This is a trend. We went into 2 days of accumulation, and the point that I want to make this morning is this: if you can stay alive in these zones, this is where you become a trader. These zones here, if you don't blow your accounts in this area here, because the purpose of this is for the banks to take all the money you made here, the money you made here. The purpose of this is part of the game. This is actually the most important part of the game, the consolidation market phase. Some people call it accumulation distribution. It's the same thing. The purpose of it is price acceptance, and during the price acceptance, that is where your metal is tested. It might take longer. The longer it takes, the more profitable the trend will become when it breaks out for it. So we have the structure lines on the chart, which are the blue lines here. Okay, we can see there's a failure here. We have a downtrend that failed to make a lower low. Instead of making a lower low, price made a higher low, and the price proceeded to break the starting point, which is here, of the wave that failed to make a lower low. Then eventually we had the completed wave structure to the downside, which is the manipulation phase. Let me show you something. This is the question for success here. We ask ourselves, what is the market condition? Up, down, or sideways? As we can see, during that consolidation, that is a downtrend. And if we have a trend changing pattern, which we did have, this is a trend changing pattern. It failed to make a lower low, then it made a higher high. That's a trend changing pattern. And if that's a yes, okay, you want to wait for a complete wave structure. What I mean by that is you have to count the waves 0, 1, 2, 3, 4, 5 after the trend changing pattern, because that is the manipulation phase. For the weak buyers that took the trade here, they will knock them out. And also they want to knock everyone that took this buy here yesterday. They want to knock them out. That's the manipulation. Okay, and that is why I said if you can escape all this, because they will force you to buy here, they will force you to buy here, they will force you to buy here. Okay, every technical that the markets, the traders are using to find entry will give you buy signal somehow here, here, and here. So once they have this full market, okay, that people are buying, that's why you see a complete wave structure here to knock everybody out, because people are placing their stop loss here, here, and here. So once they knock them out, they will move the price swiftly before you recover your mindset, before you have a clear mind, because you've lost money here. The market has already left the station. Then you will now be scrambling to get in again, or even some people will take a sell here, and that is the result. But if you can stay alive in this zone, this is the most difficult part of trading. And if you stay alive in this zone, then you will become a consistently successful trader. Okay, The key here is to understand what is going on here. Then when you understand what is going on here, you can actually buy and sell. It doesn't matter to us as long as you know what is going on. So understanding the current market phase is very important to your journey as a trader. And by counting the waves, which helps us to get it, it takes us very close to where we need to be. The rest of the journey is all about your execution skills and your psychological edge, which is your mindset basically, because trading is not physical. Okay, the knowledge is practical, but the application in trading is all psychological. And the banks, they use this to their advantage because people are so fearful. The mind takes over and you start to behave irrationally. But when you understand that all you need in trading is to align your mindset to the way the market works. After you've done that, you need to be calm. Okay, I teach all this. This is part of the package at Chart247 Trading Academy. Okay, that is what we do every day. And today, this trade I'm going to record this trade we are buying. Okay, and for us, the simple fact is this: we count the waves, and these waves gives us information, and those information we attach meaning to them. Okay, at two, there's a certain behavior we want to see, and a certain decision. We can only make a certain decision. If it's in a downtrend, we know what 4 is, what 2 is, what 1 is, what 3 is, and what 5 is. Okay, and I'm going to be explaining some of this concept today. So we have a momentum high here. This momentum high is just a potential. Okay, once the price break this momentum high, that's the first momentum high we have. This is a structure. This is a momentum. Okay, a structure that made a structure. Okay, so we have 0, 1, 2, 3. Okay, and we have another one here. This is a momentum. So which one of these is more important? This is the most important price point here. In order for this uptrend to fail, price has to break this point here. In order for this downtrend to fail, price has to break this point here. So you have a level that you're looking at. Okay, then we can see now this 109.67 is a structural point. Price is struggling around that price point, but we need to observe how the close. We always look at the close, not the candle that is moving about, because anything can happen within a 5 minutes candle. So you always want the close of that candle in order for you to make a final decision. The simple application of the horizontal lines that we draw on our chart is above you remain a buyer, below you remain a seller. It depends on the wave structure, however. Okay, and that is the thing that keeps us out of a lot of trouble. So currently the price has broken the two structures here, the 2-wave structure, the 4-wave structure. That is what we call the participation move. Okay, at the break of year of this price, these two, we call that participation. The banks are now active. They want to buy because they've broken 2-wave structures down, and for us that is the directional move. Okay, let me highlight it. That is the 2 there. And we call this move here participation. Okay, that means the banks now have a directional move, that they are moving the price in one direction. Okay, yeah, we need to see this wave structure completely broken down. That confirms to us what we've been talking about. Then we can use the structural points to take profit or to add to our position. We can buy, sell, we can do any of those things. The key thing here is to understand the market flow. Okay. That's the momentum high that I was pointing out. You see, from that day, which was Wednesday, today's Friday, price has been in this choppy area. And this choppy area is your best friend. You cannot make much money here, but you have a lot of information here. Okay, you need to see how the price develop, and once we see a failure inside here, we know a direction. Okay, the failure took place here. They manipulated the low, which gives us opportunity. Okay, and as long as you escape all the pain here, then you are now ready to make money. Okay, because after this move there will be a profit release. Okay, the banks are holding on to the profit, and once they finish with this move, they will release the profit. We've seen a potential structure here. Okay, we've broken above this internal structural failure point. The important thing here is this. This is not a trend change to the upside. This trend change will have a correction. Okay, it will have a correction. The correction will not take place now. Okay, we need to see a change of character point, change of character here. This is the retracement zone here. And when this wave structure completes, so when the wave structure completes, so we only have 0 to 1 right now, 0 to 1. We don't have 2 yet. We need to see 2, 3, 4, 5. Then this will be the retracement zone. Okay, very important to understand that. I'll keep adding to this position because this is a profit release phase. We have to, this is where we make the money. Okay, we've been struggling with this, no opportunities here, but now the opportunity is being released and you have to take advantage of it. No, you cannot be jerky here. You wait, take the full advantage. Linda Rashke will always say 10% of your trade will be the big home runs, 90% will be the give and take. It's just gonna be like a tennis. You're trying to get the ball into the opponent's courts. Okay, that's the 90% of the trading activity. So when you have the home run, which is after a consolidation phase and a manipulation phase, that's where you get your big payday. Okay, and this, you can capture this twice, at least twice within a week. So your job as a trader is to be patient during this thing here and not to fall for fake out like this, and wait for the price to come to you. Then you take the trade, you stay with it, and to make your money. Okay, this is where you get paid. It's actually a strong one. Okay, we have a change of character here which has been negated. The starting point, this is a structure. You now have a bullish move. The daily candle is very green. That's the participation point there. So basically, I'm not trying to hide anything. I'm giving everything away. I know what I'm giving away is quality, but at the same time, for people that have gone through the stages, maybe you are in stage 5 or stage 3, you can utilize this. If you are still in your first stage of development in trading, then you probably would not be able to utilize what I'm giving you right now. You need to study. You still have a long way to go in time, and people, you have to accept that. Okay, you have to accept that. The longer, what will determine your development in trading is down to your mentor. Okay, who is going to teach you? Okay, some people think because they've done 7 days course, or I did the 7 day course in 2008. Okay, and after I finished the 7 day course, I thought I know everything, and it took less than, I think, half a day for me to realize um, there's a journey ahead. Because after leaving uh, London, I've paid 8,000, I think it's 8,600, including my hotels and everything, probably 9,000. Okay. After I did that, I came back to Wolverhampton thinking, wow, I'm not a I'm not a trader. And God knows, I'm laughing now because it's not funny. Thank God for my family and the friends and the people that supports me over the years. It's not trading is a big big commitment. You have to is one of the most is the hardest thing ever. Okay, if you don't have the stomach for disappointment, go and study doctor. Go and become a medical doctor or a lawyer or something. It will take you less time. Okay. Or if you join my academy, we can speed things up for you because we've been there and you don't have to go through all the pain. I'm not guaranteeing that you won't lose money. You will lose money because that's actually an important part of the game, because I cannot hold you all the time. I have to let you go so that you can discover the change cannot be done for you. The change that is required to trade successfully, the change of habits, mind, all those concepts I'm talking about, they cannot be done for you. We can give you the tools and help you, point you in the right direction. You still have to swim yourself. I cannot do the swimming for you, because that means you might as well not take my course and subscribe to my signal service. Even with that, you cannot do it. Even if I tell you buy now, there will be something. If you haven't gone through the process, if I send you a buy and sell signal, there will still be something within you that will allow you to make mistake. Okay, and that's why trading is very tricky. You still have to go through the process, and the process is what is the game changer. Once you go through the process and you pass the process, it, depending on what you've been through in life, it may take 6 months. Some people it's 1 year. Some people it's actually very quick as well, depending on your exposure. And this, once you can overcome the barrier, then you are fine. You're good to go. Okay, enough of my preaching. Let's get back to the chart. Okay, so we've touched the momentum high slightly. You can see the candle did not close above it. It's looking good. see that? Very good. I want to add a concept quickly, which is the Murray concept, okay? For price going up, okay, or for prices trending up, which this one is, okay, there are two price points that can stop the price from going up. That is the 7 of 8 and the +1 of 8, and both prices has been traded and broken. Okay, we can see this Murray is very tight, so the expectation is that at the break of this high, this current daily high, we will see a new trading frame created, which will be bigger than what we currently have. All right, and we want to monitor the 7 of 8 and the +1 of 8. That's basically what we have. We're seeing a pullback here, which is just a normal pullback. This is a normal pullback, and this is the structure here. Okay, I'm not missing anything. Let me hide this one. Yeah, that's the structure. Ideally, we don't want the price to come below the structure, this broken structure. We may come and test it, but we don't want the price to be breaking this structure down. That would be a reversal, which could take the price all the way down again. This is normal, okay? You know, the simple truth is this: the market will not travel in a straight line. We've seen a participation. There will always be a time to breathe, okay? It's like that, okay? And inhale, exhale, inhale, exhale, and that's the way the market or the price moves. So those small pauses are actually good. They are opportunity for price to form a better structure, and also it's like a rubber band. You pull it backward, you release it, it goes further forward, and that's the way the price behaves. So it will be interesting to see the Murray level now once the price breaks the high. Like I said before, using the Murray math, the +2 of 8 has changed because the price has broken higher. We now have a new expanded trading frame. And I said something, there's a simple concept here. Every market going up has two price points that can disturb the trend up, the 7 of 8 and the +1 of 8. So we now have a new level. This is more significant here, this one here, because we have a structure of 110.08. The 7 of 8 is 110.059, which is about 3 pips or 2 pips difference. And the +1 of 8, we have a structure there as well. Also, this is more strong. This is a stronger price point because we have the daily resistance 3 and the structure 110.22, then the 1 of 8 110.25. So this is a strong price point here. We've not seen a pullback, which can be considered as 2 pullback. So we can say for this wave structure, the price we have is still 1. Okay, I've shrunk this chart up. If we expand this chart, you will see the magnitude of the move that we're currently trading. Okay, our profit is 5.3%, and we are now approaching this structure 109.93. The major momentum high has been broken, and then let's look at this chart, and that's where we are. All right, so that's the momentum high. Let's look at this chart. You can see now we drew the Fibonacci onto this chart. This is the Fibonacci, the GM4 here is here, which is always a strong target for a fast momentum rising market. One thing that I have to mention here though is you have to always think of where are you going to be wrong. Even though you're making money, you still need to have it at the back of your mind that the price is the perception of traders. They can change their mind, okay, but within reason. And where do they normally change their mind is when price has recently broken into a new trading territory, and those trading territory are the momentum highs and the momentum lows. Okay, if we break a momentum high, the simple rule that we follow is momentum high must be bought. So that means we are buying because the banks have broken out. But if we bought that market and the price did not give us the expected behavior or reaction, which is to continue, to accelerate in that direction. If we don't see that and price then change direction and start trading back below that momentum high, that is a reversal trade. And that is where we have to close the buy position and take a trade in the opposite direction, because that will be a very quick, profitable trade, fast reversal trade. That is a reversal trade. If it breaks below a momentum low, and our expectation is momentum low must be sold, so we will, if we are not selling that momentum low before it breaks, if we are not selling the market before it breaks the momentum low, then what we have to do is close or execute a new position and trade to the downside in the direction of the momentum low break. But if price stopped, because our expectation is for price to capitulate to continue downside, but if that price stops to continue down or continue lower and it turns around and start to trade back above the momentum low after it has broken the momentum low, then we need to close the sell and initiate or execute a buy position, because that will be a reversal trade. So that's what we need to keep an eye on. Okay, keep an eye out for here, because we are now above the momentum high and we do not want this price to start coming down to break this. Let's assume this low here, and so our trade now is very simple. Okay, we stay as a buyer, but if price starts to break below, let's say this price point here, because that means price has broken the momentum high, it has failed down, and we can initiate the trade, there will be a reversal. Okay, but we are not thinking about that now. I'm saying all this for you to have a plan, okay, so that you can react. We are not predicting anything here. We have a plan. By understanding these key price points on your chart, then you will be able to have a plan of action. If this happened, this is what I'm going to do. If that happened, this is what I'm going to do. And also there are times where you just have to stay away from the market. Okay, let it breathe, let it decide what it wants to do. Okay, but we've come out of that zone now. We are seeing a profit release. This is a profit release phase, and you don't, if something like this did not happen, like a breakdown into this reversal, you should not attempt to sell this market. Trying to do that, I've done that many times, will not help you. The money you've made, you're going to lose it. Your state of mind should be objective. You are buying or doing nothing. Selling above here